Right, 18,700. Let's go to the cash flow statement and let's fill in these figures so that we don't have to go back to it. So remember, cash flow from investing activities, purchase of fixed assets, right? And remember guys, we purchased equipment, 18,700, plus we also purchased land and buildings. So let's include the land and buildings as well. So 18,700 was the purchase of equipment, land and buildings 93,750. So let's fill that in, plus 93,750, and that will give us an outflow of cash because of this purchase. So if we just add plus the 93,750, and that is giving us an amount of 112,450. So let's fill that in, 112,450 in brackets because it's an outflow of cash. Right, because I also looked at the sale of equipment. So remember, proceeds from sale of equipment. Okay, remember guys, I've just done the calculation. That's why I'm filling this in. And remember, this would be recorded at carrying value. So the equipment was sold at carrying value. And remember, we calculated the carrying value to be an amount of 3,700. So let's fill that in. 3,700 was the amount that we received for selling the equipment. It's obviously not in brackets because this is an inflow of cash. So we've already filled in cash generated from operations, and remember, this came from note 1. So on the next line, remember, you need to now disclose interest paid for the financial year. Now, if I go back to my additional information, remember your interest expense, 25,000. And if I look further down, mortgage loan, interest is not capitalized, and there's no additional adjustment about any interest being accrued at the end or the beginning of the financial year. So if I go to trade and other payable, there's no accrued expense for interest expense or interest on loan. So in this particular case, very, very straightforward. Your interest expense, 25,000, is the interest that you've paid for the financial year. So your expense is equal to what you paid. So all I have to do is simply fill in that amount of 25,000. And remember, that represents an outflow of cash because it's a payment. Okay, right, then on the next line, dividends paid. Okay, now remember guys, dividends paid, you can either show the calculation somewhere on the page itself, maybe the bottom of the page or the top of the page, or you can show your calculations in brackets. So I'm going to show my calculations on the side. So I'm going to start off with opening balance, in other words, the amount owing my shareholders at the beginning of the financial year. So if I go to my balance sheet, right, and if I scroll through the additional information, so trade and other payables, shareholders for dividend at the beginning of the financial year, we were owing our shareholders an amount of 25,000. And remember, that 25,000 will eventually get paid, so it's an outflow of cash. Okay. Then my total dividends for the year, in other words, my dividend expense for the financial year. So if I go back to the extract from the income statement and note, so remember this would have been not in the income statement, but rather, okay, let's just quickly fix that. This would have been in your retained income note, an amount of 20,000. So that is your total dividends, dividends paid declared, in other words, interim plus final. So your total dividend expense for the year, an amount of 20,000, which also represents or should represent an outflow of cash. Right, closing balance refers to the amount that you still owe your shareholders at the end of the financial year. So remember, at the end of the financial year, how much are you owing? How much did you not pay your shareholders? So let's go back to trade and other payables. End of the financial year, 2020 is clearly the end of the year. Remember, 2019 is the beginning of the financial year. So at the end of the financial year, I did not pay my shareholders 14,000. So remember, what does that mean? That 14,000 is money that is now staying in my bank account. Okay, it's not an outflow of cash because I haven't paid this to the shareholders. So that money, or that amount of 14,000 rather, is an inflow of cash. So in total, how much money in total was paid to your shareholders? So using our calculator, let's get that out quickly. We're simply taking 25,000, okay, 25,000. We then adding the 20,000 and we are subtracting 14,000 and the amount that we paid our shareholders, an amount of 31,000. So 31,000, and that represents an outflow of cash. 31,000, remember, it's an outflow of cash. Okay, so guys, please remember opening balance plus your total dividends for the year, interim plus final, minus closing balance, and that will give you your dividends that were physically paid to your shareholders, money that left your bank account because you're now paying your shareholders. Okay, right, next calculation, tax paid or taxation paid. Okay, so here again, guys, some of you may prefer to do the income tax, the SARS income tax account. I often like to do the account as my calculation, or you can show your calculation in brackets, whatever you prefer. Okay, so let's do the calculation in brackets, or you can do the T account, doesn't really matter. Okay, so let's go to our information, and we're going to start off with the amount owing to or by SARS at the beginning of the financial year. So if we look at our information, trade and other receivables, SARS income tax, beginning of the year, 2019. Just be very careful with the dates. 2019, at the beginning of the year, SARS is owing the business 6,250. So remember, that 6,250 is money that's going to go into your bank account because this money is owed by SARS to the business. Okay, trade and other receivable, obviously a current asset. Right, so let's take the 6,250 forward. Okay, in brackets, 6,250. Remember, that is positive. Right, now let's look at your tax expense for the year. So your income tax, according to your income statement, your expense for the year, an amount of 75,000. So remember, that 75,000 is obviously, you're going to minus 75,000 because it's your expense for the year. Okay. Right, so I've recorded my expense. Now let's look at the balance at the end of the financial year. So if we go back to our information, right? So if we look at trade and other receivables, so clearly SARS is not owing us money, which means we are owing the receiver. We are owing SARS at the end of the year. Trade and other payables, we are owing SARS an amount of 16,250. So that amount, 16,250, remember, still owing means that this money is staying in your bank account. This money has not left your bank account. You are still owing the receiver an amount of 16,250. So all you're doing is you are adding 16,250. Again, guys, remember, you could draw up the SARS account and you're going to still get the same answer. Okay, so on our calculator, let's quickly calculate or add up our positive values. Okay, so we've got an amount of 6,250 plus, I'm going to add 16,250 minus 75,000, and the amount that we physically paid the receiver, 52,500. So 52,500, and this is an outflow of cash. So remember, even though your tax expense is 75,000, remember, you would show that in the income statement. The cash flow statement, on the other hand, what did you physically pay the receiver? So we paid the receiver an amount of 52,500, which is clearly an outflow of cash. Right, I've got just over a minute left, so I want to quickly try and do cash flow from financing activities. Obviously, you guys can add up, so I'm not really worried about that too much. So proceeds from sale of shares. Let's see if we can do this very quickly. There's no buyback, so this is very, very straightforward. Right, if I go to my additional information, new shares were issued during the year, and as I mentioned, there was no buyback of shares. So all I'm doing is I'm going to my income statement, not income statement, sorry guys, balance sheet, ordinary share capital. So if I look at my ordinary share capital, 150,000 previous financial year, current financial year 200,000. So clearly there's been an increase in my share capital, an amount of 50,000 through the sale of shares. So let's fill that in. Okay, an amount of 50,000, and remember that amount is going to obviously go into your bank account, and it is an inflow of cash. Okay, right, I'm trying to quickly look at the loan amount because we don't have much time left. So looking at the loan, your mortgage loan, interest is not capitalized, so very, very straightforward. So compare last year, 100,000, to this year, 81,250. So clearly we can see that we repaid, okay, an amount of, let's just do that on our calculator quickly, 100,000 minus 81,250, we repaid an amount of 18,750, which you will show in your cash flow statement.